Am I live? What's going on here? This is not working out. Well, if it was fine earlier, but I wasn't using StreamYard though. Oh, I did this already. Oh, is that what's missing? There we go. There we go. Okay, so now, yeah, we'll go on LinkedIn and let's go on LinkedIn. All right. Here we go. All right. Happy, what are we? Monday. Happy Monday, everyone. Happy Monday. All right. It's been a while since I've been live. I went live, I think it was last week or maybe 2 weeks ago. And things have changed on Facebook. So I had to connect my Facebook to StreamYard, and then I had to go live on it. It was a lot. Okay. But we are here, all right. In today's video or in today's live, we're going to be talking about the difference between trading and investing. Okay. So I'm super, super excited to discuss this topic. Okay, so why, true to fashion, all right, why did I decide to do this live? I decided to do this live because earlier this month I redid, not redid, but I re-recorded, okay, my complete beginner's guide to stock market investing course. Now this was the course that started it all. Before I decided to open up this business, I was a full-time trader. Okay, I was a full-time trader, and I was just teaching friends and family how to invest. But then it started taking some of my time, and I said, well, if it's going to take this much of my time, let me just start charging. So I would charge a very, very minimal amount because I just wanted people to see people win. Right? I didn't have the mindset that I have now. Okay. And fast forward, I started doing videos based on the questions that I would get from friends and family. I would do videos on Instagram. I would do stories on Instagram, right? And I would talk about investing, how to trade and all that jazz. I would even post some of my wins, some of my losses, even my losses, yes, because I wanted to show people that losing is part of the game. As a matter of fact, when you're trading, and this is something we're going to talk about in my upcoming swing trading class, all right, is losses. Because losses are part of the game when you're trading, and I'll talk about what trading is, right? We treat them as business costs, okay? And so nothing in this world is going to make you multiple six, seven figures and not cost you anything. All right. And so your losses are just business costs. So, I would even post my losses and so on and so forth to set the expectations, right? People think that, oh, I'm going to start trading and I'm going to buy a stock. And just because I bought it, it's magically going to just go up because I decided to buy it today, right? Yeah, that's not how life works, right? That's not how investing works. That's not how trading works. So, fast going back to the story. Okay. So, I actually did the complete beginner's guide to stock market investing. And then I was so excited that when we got to the AI part, because I was speaking about, AI and how to use AI in helping you with your investments, set the foundation for your investments. And I even talked about how AI will not replace an advisor. AI will not replace a portfolio manager. AI will not replace a financial consultant, an educator, an investment literacy professional like myself, right? I coined that term, by the way, investment literacy. I'm sure I'm not the first person who's ever said it, but it's not a thing. Okay. I looked it up. There's nothing out there that's on the internet that's talking about investment literacy. So I will take it upon myself and coin the term. Okay. But going back to the topic, right? And so you don't, AI is not going to replace a live human professional. As a matter of fact, let's have a conversation real quick. When I was doing my master's in finance, right, we had a project where we were looking at the future of finance. And this was in 2016. So next year we'll make it 10 years. Sheesh. 10 years ago, I got my master's in finance. I've been in this game for a minute, okay? All right. So what we were doing a project, I remember it like it was yesterday, but it wasn't yesterday. It was almost 10 years ago. Oh my gosh. Oh, where did the time go? Anyway, so one of the things we had to talk about is the evolution of technology and where do we see technology in the next decade or two, right? And here's the thing, robo advising, AI algorithms when it comes to trading is not new. Okay. When it comes to the finance world, AI is not new. AI has been around since the 60s, 70s, 80s. Okay. Most of your portfolios, especially if your portfolio is being managed, if you have a 401k, a managed IRA, or any type of managed portfolio, there's most likely AI. If you own any index funds, if you own any ETFs, right? They're most likely managed by AI, right? And so one of the things we discussed throughout that project was that when it comes to money, right? Money is all about trust, okay? And yes, you can trust the machinery, but just like you could trust the machinery, you can also trust it to malfunction sometimes, right? And then there's that human interaction, right? Money is taboo. Money is emotional, right? Money is taboo in some cultures. Okay, I don't want to say it's taboo. It's taboo in some cultures, but it is emotional, right? And so there's always going to be that emotional aspect, that need to be vulnerable, that need for the human understanding, that need for that human connection when it comes to your finances, right? And I don't know how AI is going to be in the next 10 years or so. One might argue that AI will be able to I mean, now people are using AI with like coaching stuff, with like spiritual stuff, right? And so but at the end of the day, it's still a machine, right? It's still a machine. And so that's the point that I'm making. It's not meant to replace anybody, but it's meant to augment whatever you already have going on. Anyways, I went on a whole tangent. That has nothing to do with the title. But so I did a part one and then I did a part two. And everybody's like, okay, Kat, what's next? I'm ready for the next. So the Complete Beginner's Guide was about investing, right? Long-term legacy building. When we're talking about trading, we're talking about cash flow. Okay, so that's what this live is going to be about. We're going to talk about what is the difference between investing and what is the difference between trading. Okay, so who am I and what makes me qualified to be here to speak to you? My name is Katiana Kare. I am the founder of Sawa Sawa. Sawa Sawa is a financial wellness company that is dedicated to helping you trust your money decisions, demystify the world of investing, and step into your new identity around wealth. Okay. And so, true to fashion, I'm gonna go over the topic of the day, and then we'll let it roll, right? We'll let it flow. Okay. So first, let's talk about. I have an outline here that I wrote, but I can't. I didn't have the outline, so I'm just gonna go by memory. Okay. All right. So, true to fashion, the first part is what is investing, what is trading. Investing, write this in your notes, those of you who are watching, okay, or even if you're watching the replay. If you're watching the live, by the way, type in live so that I can see you, okay? And tell me where you're watching from. And those of you watching the replay, go ahead and type in replay. The reason why I do this is because when you type in replay, or when you type in live, or when you type in a one, what happens is it helps the algorithm, right? And so the algorithm shows it to more people. And the more people that this video is shown to, the more lives we impact, okay? Because this is very, very important. It's very simple information, but it is very profound because there's a lot of misinformation out there, okay? Forget the misinformation. There's a lot of information out there, and sometimes it can be overwhelming. A lot of my clients come to me and say, Kat, there's so much info out there. I just want to hire someone to show me the information that matters. That's my goal. My goal is to bring you the information that matters to you, not just to fluff your head with a whole bunch of information and just, it's for the sake of having information. No, information means nothing if you're not able to apply it. Knowledge is not as powerful if you're not applying the knowledge, right? And so my goal is to bring you information that matters, okay? So go ahead, share the live, type it in the chat, right? Boost the algorithm so more people can see it, okay? So when we're looking at investing, investing is for legacy. Write this in your notes. Investing is for legacy. The very definition of investing is taking on some sort of risk. Now, that's the same thing as trading, Kat. That doesn't really show me the difference between trading and investing. But when you're looking at investing, investing inherently means long term. Now, if you look at textbooks, textbooks will tell you 5 years, right? Katiana's experience will tell you a decade or more. Okay. I'm just going to say that some investments need a little bit more than the 5 years for them to come to fruition. All right. Some things might move a little slower than expected. And so whatever time the textbook says, whatever time the contract says, whatever time, whatever the paperwork says, I always double it. Okay. My experience has taught me that. Okay. All right. So, and that goes back to the AI, right? AI will tell you a lot of information, but an individual who has been in the game for quite some time, okay, is going to teach you with experience, okay? My experience tells me 10 years or more, okay? And so investing is buying and holding. Buying and holding. The first thing I said was investing is for legacy. Investing is also buying and hold. Buy and hold. Buy and hold. Buy and hold, right? And typically you're buying low and holding. Buy low, hold. Buy low, hold. Now, that's very general because there are some times where you're buying high, but the high is still a low in the future, right? It might be high now, but in the future, that actually was a low. I don't want to confuse you, but the goal is to buy and hold. I'll make it concrete for you. For example, if I wanted to buy a house, right? Let's say I wanted to buy a house in a neighborhood, in an up and coming neighborhood, and I was expecting for that house to grow in value. What I'm going to do is I'm going to buy the house and I'm going to hold. I'm not going to buy the house and sell it tomorrow. I'm not going to buy a house in the morning and sell it in the afternoon, right? I'm going to buy the house and I'm going to hold. Type in a 7 in the chat if you're with me, especially if you're watching the replay, okay? Type in the 7. Even if I know my live folks, you always type in a 7 when you're live, but under replay too, because again, this is going to show it to more people, create more impact, okay? And so you're buying and you're holding, okay? You're holding on for a period of time. How long? Textbooks will say 5 years. Kat says 10 years or more, okay? Now, what is the benefit of holding on to your investments versus getting rid of them right away or selling them right away? Well, you're giving the investment time to grow in value, especially with a house, right? You hold on to the house for 3, 4, 5 years. It may double in value, triple in value, right? Depending on the market, or maybe it goes up by a couple of percentage points, right? Either way, you're anticipating that the value of the land, the value of the real estate, whether it's a building, whether it's a public storage unit, whether it's a piece of farmland, whether it's a shopping plaza, right? Whether it's a hotel, no matter what type of real estate investment that you're making, right? It's not just real estate. I'm just giving you concrete examples, okay? You're holding on to the investment and you're waiting till it goes higher. And then eventually you sell it at a high profit, right? And you sell it at you sell it, yeah, at a profit, and you collect the profit, okay? Now that is investing. The point of investing is to pay your future self. That's the third point. First point is for legacy. Okay. Second point is buy and hold. Third point is you are paying your future self. Yes, I know tomorrow is not promised, but what if you make it to tomorrow? Right? I know. I used to be YOLO. Oh, tomorrow's not promised. Savings, schmazing. What do I need a savings for? I can always go and make money. That was my mindset. Oh, I could always go and make money. I could go and make money. Yes, but that's exhausting. It's exhausting. Right? I'd rather my money go make the money for me. Me having to physically do something, active income. We call that active income, where you actively have to do something to receive income is exhausting. It's fun, it's fun in the early years and all that jazz, but listen, I don't like work. I don't. It used to take me, I used to feel so shame and guilt to say that. Now I'm proud to say it. I don't like to work. If I work, it's because I want to. You see how I'm here on this live? I want to be on this live. Okay. All right. And so you guys rarely see me live anymore. I think that was the best thing that happened to me, right? When Facebook stopped me from going live, because now I don't have to do it. I used to think that I don't have to do anything. Actually, that's a whole nother live for a whole nother day. That's a mindset live. But let's stick to the topic. Okay. So you're buying and holding. See, that's what I get for going on a tangent. I'm trying to remember what I said. You're buying and holding. You are for legacy, and you're paying your future self. That's where I was. Sorry, I lost myself there. Right? You're paying your future self, and your future self is thanking you every single time you add to your legacy investments. Every single time. Okay, I can't tell you my present self now looks at some of my investments and then looks in the past and say, "Thank you, Kat. You had my back. Thank you." Right? So it's for your future self. Now, this could be for retirement, it could be for college planning, right? It could be for all sorts of things that are in the future. And so the goal of investing is to give it time. The goal of investing is to give it time, especially when you're looking at the stock market or the crypto market or any type of volatile market. Even the real estate market's not as volatile, but it does go up and down, right? And so even if the market is down, like right now, the market is in the correction right now. It's not really down, but if it goes any lower, we are entering that bear territory, right? Bear is bearish, closer to the ground is down. Bullish, you got your horns pointing up, right? That's the bull, right? Bullish, bearish. Anyway, so we are in a slight bearish trend, but we're still overall bullish, okay? But anyways, when the market goes down, like right now, the market is down. Okay, I got time on my side. I'm not retiring tomorrow. I'm not retiring today. I have plenty of time for the market to go back up or to do what it needs to do, right? That's the beauty of investing. You sit back, you relax, you let the investment breathe. You let the investment breathe. I'm going to say that one more time. Woo! You let the investment breathe. Let it do its thing. Let it go up and down like a roller coaster, round and round, shake it all about. Let it do its dance, because this is for 10, 15 years from now. I'm not worried about a down market right now. You guys picking up what I'm putting down? Type in a three if you're with me, okay? And so when you are doing long-term investments, you tune out all the noise. I don't care about the noise. Oh, Trump this and this in the news and down, the S&P is down and blah, blah, blah. I don't care, right? We have plenty of time for this thing to correct itself, whether it's the market, whether it's real estate, whether it's gold, whether it's silver, whether you're investing in land, whatever it is that you're investing in, as long as you have time, there's no rush, there's no stress. You're letting the investment breathe, okay? Now, when it comes to trading, okay, what is trading? Trading is you're buying low, you're selling high. Now, how is that different from investing? I mean, Kat, aren't you buying low and selling high and investing? Yes, but you can also never sell. Ownership, right? Oh, that's another point, right? Investing is about ownership, okay? And so the minute you sell something, you no longer own it. I'm going to repeat that. The minute you sell something, you no longer own it. So you can actually own it for quite some time. And you may pass it down to your children and your children's children and your children's children's children. So your long-term investments don't necessarily need to ever be sold, but that's a little bit more advanced. If that's a little bit more advanced, it's okay. you know what? I think that's pretty clear. But we can go a little bit deeper, right? But that's not what this live is about, right? I want to give you that information. We can always go deeper. If you want to know more, you can always reach out to me, book a money clarity call, and we can talk a little bit more because I would need more time to really explain it. But essentially, you don't have to sell your long-term investments, just like your home. You don't have to sell your home, right? Well, Kat, how do I access it? How do I, isn't the whole point for my retirement? That in comes the investing strategies. This is why you need a financial professional to help you, right? I mean, AI will probably tell you, but you'd have to know what to ask it, right? You got to ask it correctly. It's not going to tell you stuff if you don't know how to prompt it correctly, okay? And so, yes, just for now, I'm just going to keep it surface level because I'm starting to see myself trying to go too deep because that's what I do. I'm not going to go too deep, okay? But you do not have to sell your investments. There are strategies to take money out of your investments without selling anything. Okay, we'll just leave it at that. Now, with trading, buy low, sell high, and you're creating cash flow. Write this in your notes. Okay, trading is to create cash flow now. I'm creating the cash flow if I'm doing it every day. If I'm buying low, selling high every day, right? Within the day, it doesn't have to be every day, but within the day, it is a day trade. A lot of people think that I want to become a day trader because the internet did a good job of glamorizing day trading. Day trading is literally another job. I don't want to be at the beach on my laptop. I don't. I did that in the past. It's not fun. Right? You can't even enjoy the beach. You're sitting here looking at your trades. God forbid the market is going against you. Oh gosh, what's the point of even being at the beach? You might as well be in an office so you can concentrate, right? I don't want to be at the pool trading. That's not glamorous to me. Okay, when I'm at the beach, right? First of all, there's probably no Wi-Fi wherever I am. Okay, because I'm that type of traveler, right? I like to go deep in the jungle. Okay, I want to go. I want to climb, a big mountain to go on a waterfall. Okay, all right, like that's the type of traveler I am. I like to go to remote places that the less beaten paths. I don't have no Wi-Fi to be trading while I'm traveling. Okay, so, yes, the internet did a good job of glamorizing day trading, but it is not necessary for you to day trade and make a lot of money in the market. As a matter of fact, I only know maybe one or two or three day traders. And when I say day traders, I mean they're sitting here buying low, selling high every day. Like they're looking at the market. They're getting in, they're getting out on the same day. They're getting in and they're getting out on the same day. I only know actually the three people that I know that are successful, that are millionaires in trading, I don't think they even day trade anymore. Now that I think about it, they used to at one point, but they don't anymore. I don't see how they would have time. But anyways, I don't know very many day traders who are actually successful. It is very stressful and it is very unnecessary. You don't need to get in a trade the same day. Now, I'm not bashing day trading. That's not what I'm doing. I am just demystifying it because the internet did a very good job of glamorizing it without telling you the reality of it. The reality of it is you will have no life. I've been there, okay? You do not have any freedom when you're day trading, okay? Now, day trading again is buying low, selling high within 24 hours, within the same day. Now, swing trading, okay, it's kind of like a swing. Like you get on a swing and you're swinging, so you're starting low and you're swinging high, right? So, swing trading, you give it time. It's like that happy, yummy hybrid middle between investing, which what we would call long term, right? Investing versus day trading. It's that beautiful middle, that yummy middle where I don't need to be glued in front of my screen at the beach. I don't need to be glued in front of my screen while I'm at somebody's party and celebrating them. I don't need to be glued to my screen or even my phone, trying to check. That's day trading. Sorry, that was my experience. And I haven't met anybody who didn't have that experience. Okay. All right. I don't need all of that. I get the same luxury of allowing the trade to breathe, just like with long term investing. I have time on my side. There's no rush. It doesn't need to happen within the day. If I buy Apple, for example, not investment advice, okay, right? If I buy Apple at $100, okay. Oh, by the way, Apple looks like it's headed down to that 200 range. sale, baby. Okay. But anyways, not investment advice. Okay. All right. So let's say I buy Apple. Actually, 200 is a better example, right? Let's say I buy Apple at 200, right? A day trader, it needs to go up that same day. As a day trader, I'm looking at it like, come on, Apple, go up, Apple, go up. It's exhausting, right? But what if Apple goes to 250 or 230 or whatever? It goes up maybe 2 weeks later. What about 3 months later? What about 9 months later? Right? Did I not create some sort of cash flow? And maybe I have enough shares to where that trade made me 20K, to where that trade made me 50K, to where that trade made me 10K. You guys picking up what I'm putting down? Type in a one in the chat if you're picking up what I'm putting down, right? The goal of swing trading is to create short term cash flow without the stress of day trading. I'm going to repeat that. The goal of swing trading is to create cash flow in the stock market, okay, without the stress of day trading. Without the stress of day trading. When you're day trading, you need to make money every day, or you're looking to make money every day. And you need your trades to, you might make money on Monday, on Tuesday, on Wednesday. On Thursday, you do a trade and it blows everything. You just lost everything you made Monday and Tuesday and Wednesday. Oh my God. One of the biggest mistakes I made was over trading. Okay. Now I'm getting too deep, but day trading, you're creating another job for yourself. Literally, there's nothing free about day trading. Some might say, "Oh, I just trade for an hour a day." Right? How long did it get? How long did it take for you to get to that point where you're trading an hour a day? How many nights of studying? How many losses, how many blown accounts have you been through to get to the point where you're only trading 1 hour a day? No beginner is going to trade 1 hour a day. I'm telling you that right now, right? You're going to be glued in front of the screen. You're going to be studying the market for days and for hours. Meanwhile, when you swing trade, it's very similar to your long-term trading, except with your long-term trading, your long-term investing. I keep saying trading. With your long-term investing, you're focused on ownership. You're focused on legacy. You're focused on your future self, right? That's what long-term investing in it is. While swing trading, you're focusing on creating cash flow. And so swing trading is a great way to supplement your income. Could you create monthly income through yeah, could you supplement your income monthly through swing trading? Yes, you can. Yeah, I call that more of income trading. Okay, that's my term for it. I created that term, or maybe someone else had said it because there's nothing new under the sun. Okay, every time you think you created something, it had already been here. It had already been here from somebody else. Okay, so I'm sure somebody else has said income trading, but it's essentially you're not day trading, you're not trading every day, right? You're just trading to create extra income every month. Could you do that? Yes. But the swing trading that I'm going to be teaching in my complete beginner's guide to swing trading, by the way, the pinned comment there, okay, I'm sure you see it on Facebook. If you're watching on YouTube or if you're watching on LinkedIn, I will post it in the comments after I'm done with the live here. But essentially, the goal of swing trading, it's super low effort. It's not passive. Passive to me is you are literally doing nothing. You're not lifting a finger and you're making money. That's my definition of passive. I know the internet has its own definition of passive. All sorts of things are called passive. And I'm like, that's not passive if I have to post every day. That's not passive if I got to be in people's DM. That's not passive. Okay. All right. What I mean passive is literally I'm not doing anything and the money's making money for me. So I don't want to say that swing trading is that passive, but it can be where you literally click a button, you click another button, and you just walk away and you let it breathe. Okay. So it's very low effort, very easy strategies, low stress. You don't need to hurry up. It is not essential for it to happen right away. And when it does, it's a bonus. You can supplement your income for your business. This could be supplemental income. Maybe you don't have a what's the word, a robust cash reserves, right? But you decide to swing trade, and then 3 months later, 4 months later, your trade made you 10K. Well, then take that 10K, put it in a nice high yield savings account for your business, and now you have a nice reserve. I don't know how long that's gonna last you. Depends on your business expenses. For some of you, it might last you a few months. For some of you, that's barely a month, right? So everybody's different, right? But the goal is to supplement your income with very, very low effort, right? I don't want to say passive again. Again, I'm very particular about the word passive. Passive really means passive when it comes to me, okay? When passive comes out, I mean passive, okay? I don't mean internet passive, okay? Because a lot of things on the internet talk about passive income. I'm like, that's not very passive. That's very active, okay? But passive would be your long term investments. Now that's super passive because you're not doing anything. Your money's just multiplying and multiplying. You can automate it and everything. Your swing trading, now they do have algorithms out there. They do have robos out there, AIs out there that program the trade to where you tell the robot, hey, here are the things to look for in the market. Every time you see this, I need you to buy here and sell here. You can do that, but that's more advanced, right? That's more, now you got to get into AI, you got to understand how to use those types of things and so on and so forth. But I'm talking super passive way to supplement your income, and I'm excited to have this class, okay? Complete beginner's guide to swing trading. I'm going to be teaching you how to look at where the big banks are buying. What are the prices that the big banks are buying? Because here's the thing, when you're entering the stock market to create cash flow for yourself, you're not trying to compete with the big boys. We're not trying to compete. We're not trying to beat the market. What are you going to beat? The market has trillions of dollars circulating in it. Until you get to trillions of dollars, you're not beating anything. Okay. And so what you want to do is you want to ride the wave. If the big banks are selling are buying, you want to buy there too. If the big banks are selling, you want to sell there too. Now that is not investment advice. This is trading. Okay. All right. We're talking about trading. We're talking about buying low and selling high in order to create cash flow. Okay. So, any questions, comments, or observations? Let me see if I have any comments in here. This Facebook thing is kind of weird. Um, oh, Christina is watching. Hi, love. How are you? Okay. I think I don't see, I can't see much. But anyway, I wanted to talk about trading versus investing. All right, type in a six in the chat if that made sense. So let's reiterate. Let's bring it all together. So investing is ownership. You're buying to own. You're buying to create a legacy. You're buying in order to take care of your future self. You're buying and giving it time to breathe. Okay. Versus trading, you're buying low, you're selling high to create short term cash flow. You're buying low, you're selling high to create short term cash flow. Now, when you're trading, there is day trading. Day trading is you're buying low, you're selling high the same day. You're buying low, you're selling high the same day. Swing trading is you're holding on a little bit longer. I'll give you an example. One of my students in my swing trading program, because I have the class that I'm going to be teaching, okay, introduction to swing trading. And then if you want to continue working with me, which is what happens, okay, I give you the introduction, you get excited about your investments, and you want to keep working with me. That's usually how it works. So she took my swing trading class, then she moved on to my swing trading program. She did a trade on Tesla last year. Tesla was around what it is now, about 250 or something. It was hanging around like 250, 220 or something around there for a very long time. Okay. And she followed my strategy, kept going, gave the trade time to breathe. She didn't need the money tomorrow. She didn't need the money at the end of the month to pay her rent. There was no urgency, right? And in October, when Tesla hit the all-time high at the time, okay, was it an all-time high? It was a high. Let me not say all-time high because I got to look at the chart to remember. But when it hit a high in October, she was able to make $10,000 profit. Now you might say to yourself, well, that's not sexy. It took from April all the way to October. Remember, this is money you barely had to do anything for. She literally clicked a button, another button, and just left it alone while this was working in the background. Of course, she had other ways that she was making money. She also does income trading as well. This is where you're creating income on a weekly basis, on a monthly basis, and so on and so forth without day trading. Okay. All right. And so she had other things going on, but when October came and she sold at her target, okay, because she saw, okay, this is where the big banks are buying and this is where they're selling. Okay. So let me do the same. And she was able to make $10,000. Guess what? She took that $10,000 and she put it inside of her long-term investments. And now she was able to front load her long-term investments and get closer to her retirement goal. You guys picking up what I'm putting down, right? A lot of times your investments can be accelerated if you simply invest more. Okay. And so she was able to accelerate her retirement by dumping
Mhm.
10K that she didn't, she didn't have to go and work super hard for this 10K. Of course, she practiced, she learned, right? And that's not the only 10K she'll make. She's doing, we're doing all the same thing. It's me and her as well, right? We're doing the same thing, the same strategy again. Tesla's back to those lows again. All right. Now, when will Tesla go back up? I don't know. Is Tesla ever going to go back up? Most likely it is. And what if it never does? That's why you have your risk management, right? What if it never does? Well, I already have that covered as well. Okay. And so I'm going to teach you all those basics. Okay. I'm going to teach you how to know when to get in, how to know when to get out, and how to protect yourself in case things go sideways. Okay. In case things don't go according to plan, right? You always want to plan your plan not going according to plan, right? You want to plan for when your plan does not go according to plan, right? And so you always want to have risk management. Risk management is even tighter when you're doing short term trades because remember, you don't have the same type of time on your side. You don't have 10, 15 years for things to correct themselves. You just have a few months, maybe a year or two, okay? And so you definitely want to plan for the plan not going according to plan, okay? All right, guys, so that's my time. I didn't want to stay too long. All right. Today we talked about trading and investing. I'm going to be talking about that more. Okay. So this was just a little warm up. I'm going to have multiple parts where I'm going to go deeper into everything. But I'm getting my groove back because I don't really go live as much anymore, but I low key kind of miss it. I can't believe I'm saying that. Okay. But I'm getting back into the groove of things. So look out for a next live. I most likely will try to keep Mondays. I've been doing Mondays. I used to do Mondays, so I'm gonna try to keep up with it. Okay, we'll see how I feel. Because remember, I'm doing this because I like it. Okay. All right, everyone, have a good day. Don't forget to. Oh, I forgot to say this. By the way, the first 5 people, I already have three spots already taken. Right, I only have 2 more spots. The first 5 people get it at 157. Okay, it's a beginner class. It's gonna be 2 days. The first day we're gonna take a look at some things I'm going to teach you, and then you're going to do a little bit of homework, and then the next day we're going to implement. Right, there's knowledge and then there's implementation. I'm not one of those teachers who's going to teach you and say good luck, go implement, have fun, go implement on your own. No, we're going to learn together and we're going to implement together. Okay. And so grab your spot. There's only 2 left at 157. After that, the price goes up to 297. Okay. It's amazing value either way. Okay, whether you pay 297 or 157 for it, this should actually be about $1,000. The type of information that I'm going to go over literally have made my students tens of thousands of dollars. I just gave you an example, right, where one trade she made 10K from that. Okay, and that's just one trade. I had students who doubled their portfolio, tripled their portfolio. Now I have to be careful giving these types of testimonials because the Facebook algorithm, it could be considered as outrageous or whatever, but you're trading, you're buying low, you're selling high, you're doing it again and again and again. So it's not far-fetched to create that type of income that doubles your portfolio. That's not far-fetched at all, right? But I got to be careful. Okay. All right, guys, have a great night. I'll talk to you soon. Bye.